Welcome and thanks for joining this short guide on a surprisingly costly compliance trap for foreign founders. In the next few minutes, we'll explain Form 5472 and the Pro Forma 1120, why missing them can trigger a $25,000 penalty, and what practical steps you can take to avoid that worst case scenario. If you're a non US founder with a US single member LLC, this presentation could save you from one of the most expensive IRS penalties. We'll break down who must file, how the penalty works, and the common mistakes that trip up foreign owned businesses with clear practical advice to keep you compliant. This video is aimed at non US persons who formed a US single member LLC for e commerce, SaaS, or consulting, people who were given incomplete advice like no filing needed, owners with 25% or more foreign ownership, and anyone who has heard of Form 5472 but isn't sure it applies to them. Form 5472 is essentially an information return that reports transactions between a US entity and its foreign owner or related parties, and it's required even if there's no US tax liability. The Pro Forma 1120 is a mostly blank corporate tax cover page used as the required wrapper for that submission, and missing this pairing is a common trap. You generally must file Form 5472 if your US company is at least 25% foreign owned, if it's a foreign owned disregarded entity like a single member LLC, or if reportable cross border transactions exist. Typical scenarios include selling on US marketplaces, owner capital transfers or loans, foreign companies providing services, and cross border reimbursements. A reportable transaction is any significant movement of value between the US company and its foreign owner or related party, including capital contributions and loans, service fees and management payments, royalties and IP licensing, goods and inventory sales, and expense reimbursements. Even owner payments that cover expenses can create reportable activity. Key filing dates matter. The standard deadline for calendar year foreign owned entities is April 15, and you can request an automatic extension to October 15 by filing Form 7004 before the deadline. Note that many foreign owned disregarded LLCs cannot e file and must mail the Pro Forma 1120 with Form 5472 to the correct IRS address, keeping certified mail receipts as proof. The initial penalty for failing to file a complete and correct Form 5472 on time is $25,000 per form per year, and continued non-compliance can trigger additional $25,000 penalties for each 30-day period after initial 90 days lapse. Penalties apply per form and can accumulate across years, so catching issues early is almost always cheaper than waiting for an IRS notice. Common mistakes include assuming zero income means no filing requirement, omitting the Pro Forma 1120 wrapper, failing to report related party transactions, using the wrong tax year or leaving multiple years unfiled, and assuming your local advisor knows US rules. The right approach is methodical: confirm structure, fix historical records, clean your books, and set a forward compliance plan. Don't learn about this penalty the hard way. A quick review now can be far less costly than dealing with IRS enforcement later. If you need help, services typically include Form 5472 and Pro Forma 1120 preparation, clean bookkeeping in QuickBooks or Xero, and practical support to build a complete compliance picture so you can focus on growing your business.